Welcome people, and not many people know that, yes, during the course of last night and today, the Nikkei 225 has made a new all-time high. Now to many of you, you'll think, so what? All-time highs happen all the time. You had them in the S&P recently and etc, etc. No, this is big. Why is it big? Because the last time it happened, let's go to the charts for that. The last time it happened, it was 1989 turning 1990. That's right. We're talking about a stock market index that has actually spent 10 years of the previous millennium and a further 24 years so far to get to this point where it once again made a new high. Why is this significant? Well, that's 34 years. 34 years. Oh, I was a younger man when that Nikkei was hitting that high. I was wearing younger man's clothes. Anyway, so great news for the Japanese on one hand. But what I'm really going to talk to you about is the following. As we mentioned, as 2023 was starting, it was the end of 22, Stanley Druckenmiller was interviewed and he said, oh, such a difficult market, I have no ideas. And I was like, we've got an idea for you, Stan. We've had this idea for the last 2 or 3 years before this, and it's still paying short the yen, long the majors with export markets of the Japanese market, which is often characterized by the Nikkei 225, but you can even do better by selecting the key players, such as the likes of Toyota, Nintendo, Mitsu, etc., etc. Now, many of you guys will go, those are names far away. I live in America. Why do I want to know about this? You can do it too, and it's one of the biggest macro trades. You see, here's the thing everybody misses. That buying a company just down the road or with a good old wholesome American name because you grew up in the state next door and you saw their trucks rumble by doesn't make your money any safer, first of all. And secondly, this is such a macro major trend move that is going to be going down, that it's going to continue to go down, and you're going to end up wailing in and finding out because everybody will be talking about it at some point in the not too distant future. Why is that? Because at a macroeconomic level, amongst the tier 1 nations, Japan is the first legit, serious IER1 nation. That is not Argentina, it is not Guinea-Bissau, it is a proper global world competing high first world nation that is taking itself through the debt trap. It is the pace car in this Indy 500 race. It is the lead steer in terms of being hopelessly over indebted, not having the privilege of the global world currency like the Americans, and having geared up so much and have gone so big that they can't allow interest rates to go any much further or faster than they are currently going. And there is a huge interest rate parity differential between Japan, first world nation, and other first world nations such as the Euro, the America, Canada, Australia, New Zealand, etc., etc. Britain as well, in a kind of way. So why is this? Well, they've got a huge amount of debt. They've bought up so much of it. Their pensions locally and domestically are heavily invested in it. Culturally, the little Japanese ladies bought all the bond markets to play safe, remember, for your safety. The greatest sins in the world are happening right now in the name of government keeping you safe. I want a dangerous freedom, and I'll deal with the hazards myself. Thank you. I love a full, unharnessed, unbridled, wild freaking West freedom, and I'll carry my own rifle. Thank you very much. But anyway, before I digress and get into other things, this is such a seminal event because it's 34 years. Why is it going up? Well, the point I've made before and the point I'll continue making, and in fact, I've actually revised the target even higher. In a minute, I'll be updating you on why, technically something I hadn't seen. And the reason for this is they can't let their debt go up too fast. They can't afford to even remotely pay the level of interest that it will require. They were hopelessly indebted in the run-up of the 80s that took you into that Nikkei 38,000. Let's go to a live chart and leave this image. Oh, by the way, since Stan, just before we leave this particular one, was talking at the tail end of 22 going into 23, it's now kind of over a year old, saying I've no idea what to do. The Nikkei is up 50%, and had you gone short the yen, long the Nikkei, you would also be making on the short side of the Japanese yen, which we'll be turning to in due course. But let's go to the live market. Here is the Nikkei. This is its move. The all-time high, 1990. We can go and have a look. That candle was the highest. It says Monday, the 1st of Jan. That was the month that it started, obviously, and the 1st of December. Between those two candles, it literally looks like the January had the marginally higher high. So that literally takes you onto the first day, period, month of the new decade of 1990. So you were going 89 into 90. 38,950. And if you look over here, we are 39,241. This is coming at you as the new high has been made overnight. I think it may well have been. Let's go have a look. We drop down the time frames. What a candle. What a beasting run. 39. What were you the day before? The day before, let's pull the chart up so that everybody can see it. Why you do that, TradingView? It's not necessary. Lovely little flag there, by the way. If you're looking at that as technicians, you should be drawing just like that. Booyakasha. But let's have a look at that. What was the high? The high was 38,825. So it hadn't yet crossed. Literally, the day happened on this here morning. Nikkei, new high for 34 years. What is driving this? Okay, so some people said, oh, well, Toyota's doing well because of, Tesla, and it's doing battery cars too now, and Tesla has such a high rating, and it generates way more revenue and all of that. That fundamental fact has existed for a long, long time. Tesla had money thrown in it, Rockefeller money thrown at it in California for all that ESG things. It is a special case, kind of like when Amazon started and no one asked any questions about it, running losses. It had a bottomless overdraft, could keep spending, building the best website, building the best thing, till eventually it was Rockefeller's online store where you had to buy everything through Rockefeller and give all the wages that he allowed you in the oil business back into the same store that he ran for you, and you're not allowed outside the compound. Go and do a Google search, and it's funny how it's always that. Oh, I sense digression. Back to this. So, new high on then. Why is it happening? It's not just Toyota. I will be showing you in due course Nintendo and Mitsubishi as well as equity shares. This is the great opportunity you're not taking that you'll end up wanting to take, and you'll take it too late because it still has time to run. This has been part and parcel of a very lengthy story. In fact, if I take you back to, let's go all the way to the USD Japanese yen. That's a Nikkei chart as well. Here is that yen right here, and it was around this period. The break officially occurred during the 2021, October 2021. So this is before going into 2022. We suggested that the yen, this was the key driver because of its state of indebtedness. So people, here's the big narrative. Debt from the left particularly, but from Paul Krugman, who's part of that left, cranky economics 101, say the debt actually doesn't matter. And here, I'm here to tell you the debt absolutely matters. And you can see the pace car burning. That's at the front of the grid of this Indy 500. Its petrol tank is blown up. And what happened is the state of indebtedness of Japan ended up seeing the impossibility of the future coming. Remember, 2020, this key event, which I have cut out, that was the seminal bond market turning event of March 2020. That event was the turn for debt because such a splurge was created in debt to such a scale. Remember the articles that saw the 23 trillion with a T sent to not only American banks, but European banks that I keep reminding you of. It was a bank bailout per huge scale. And you think you got gifts because they doled out less than $1 trillion to the people in furlough payments. That was small beer in terms of the proliferation. The debt market ended there in terms of its bull. And it's going to be in a non-stop bear market till reset and restructure, all fall down, burning house. The debt absolutely matters. That was the seminal event. It killed it entirely. And that's created that particular piece of price behavior during that period right there. This is the USD dollar to the Japanese yen. This set up one of the biggest first upside HVFs in a new trend, which is destined by our theory technically and is supported by our understanding fundamentally that this is going to overperform to the upside in what will be a currency meltdown. That break occurred, my good friends, at 111.65 right there. We prepared a little drawing for you on that. We'll tweet it out later. Don't forget to follow the Market Sniper and the Reset Sniper. We are doing Reset Sniper videos again, and it's now daily, keeping them shorter and daily, and they're getting out on per topic on Odyssey. Don't forget. Anyway, so that triggering event, that occurred in 2021, and since then, the Japanese, by virtue of wanting to do yield curve control initially, were letting their currency go. If the debt market needs to deflate, rates go up. If that deflates the capital value of the debt market, it needed to happen, but you decide to hold it up and print up yen to hold it up, you are handing the damage to the currency to maintain the debt. So somebody gets a hit, the pressure has to be released. You have two valves. You chose to keep the one locked shut, the debt market. We're going to maintain this value, and we opened up the valve of the currency. In that period, from 111 to the highs of 152 that it struck, you've also had, Stanley Druckenmiller, a 36% loss in currency that had you shorted the yen and gone long on the Nikkei in around the beginning of the 2023 year, by the way. You would have done exceptionally well. You would have made the 50% on the Nikkei. Of course, you wouldn't have got in over here. You would have been 2 years late for this, but you still would have got in around here at around 128 and watched it go to 152s, currently 150 right now, and likely to go higher in due course. Not the time to enter the trade right now at a localized high. Let me just say that for those of you that FOMO into what to do today, chase, chase, chase. So this whole story is a loss of value in the yen as currency. And I'm going to take you further into history because I haven't done this. I've spoken of it, but I haven't done this. The actual truth of the matter is the great Japanese corporations actually made money, built market share in spite of a strong currency. So if I go and change this back to the monthly time frame and just show you, you can see way up here that the yen was once 360 in the 70s, and non-stop currency appreciation. Despite that headwind for their corporations, they kept getting more efficient and kept an export market, even though they had costs in yen with head offices. Now, some of you that'll say car manufacturing, they'll have local assembly plants, etc. But the bulk of the costs for the big mega names that have a yen hedge by virtue of earning dollars, euros, Aussie dollars, New Zealand dollars, South African rand, Canadian dollars, everything across the world as currencies, they have a yen hedge today that in spite of that reduction in the value of their local currency, they're actually getting better, stronger currency now. Whilst they were facing the headwind of their costs ever growing higher, and actually wages were quite slow to grow there, but their costs were higher because of the strength value, they still managed to gain market share and build export giants with a higher percentage of domestic cost to their labor force, their structure. Don't forget they have to buy in all their commodities. It helped when they had a strong currency. It's not so helpful on a weak one. But you can see that the yen turned here. Now the entire blowout that took us into the 90s stock market all occurred over here, and yet the yen for a sustained period continued to appreciate. By the way, this was the Fukushima era over there, round about there. I'll take you into it. And then there was a change. There was a the whole Fukushima narrative, guys, that's one for reset, I'm afraid. I'm not going to get into it here. But boy, oh boy, forget about natural disasters. Anyway, over here, boom. It all occurred there. That was a sell-off. You had a spike strength in the yen. Why would that have happened? Because they had to repatriate assets that they held offshore to fix their country, plus maybe they thought somebody was a perp to some degree in that. Again, reset for that at a later time. Eventually, however, the government was thrown out of the day and an extreme long shot got back into power with his bank finance minister. So it was Abe, by the way, recently apparently killed. Very bizarre. And Kuroda, his finance chief, and they decided on the 3 arrows policy, and we traded this from a forex desk all the way up, and I remember it making progress, then coming down and sitting in a lull here till eventually it got running again. That head and shoulders we called, saw and traded to the downside. That saw the capitulation of the USDJPY, which is the weakness of the dollar and the relative strength of the yen. We watched this long-winded structure finally form, and then the events, my friend, the events of this perfectly set up end of the debt market that put Japan in a place they cannot be. They can never face rising rates beyond a very low level without absolute collapse. And as a result, the currency takes the hit. Now you have those hardened corporations that worked so hard to be competitive, where a large part of their localized cost continued to be relatively more expensive compared to what they could earn in dollars, where all these other currencies were falling and falling relative to them. Now you have the exact opposite, and this is why it's the gift that keeps giving, the Nikkei long and the Japanese yen short trade. Again, don't rush in necessarily right now on that very key moment. So here I go. I take you back to the short time frame, which we were looking at on the index. We can go all the way back to the monthly. And what are we calling a slight revision to our original targets? We've said 60s. In fact, we're going to 73,000. Now, to those of you that think, what? 73,000? By the way, that looks super close compared to when we were first talking about this trade, as this triggering event was occurring way back. And the first triggering event that we called, that was our first draw, in and around the 20,800. You are now almost 40. That's 100% on an index, my friends, when that first trigger occurred. By the way, it re-triggered. This was, of course, brought down by the events of March 2020, but quickly shrugged off and then moved higher. You can see that slide. You can learn about broadening structures. When are they positive? When are they negative? Just click the first link below. And now you are going almost in a parabola. And I'm going to just highlight that looks kind of close, the 39 or the 40 going to 73. But that's because we're on log scale to capture everything that is in this chart, including 35 years of bear market turning, basing out, rounded bottom before you got to make a brand new high. You have no idea how long that is to spend in the wilderness. People grow old. This is the true extent of that target in normal regular scale. Yes, you heard it here. 73K to be run on a triggering event. We're going for the later one in and around the 22,500. The 22,500 right the way to 73. And you might say, surely not possible. Think of what your Toyota shares will be worth. Think of what all of them. The currency will be a different level of failure. It's going to be a major tailwind to these equities, and Toyota is going to be able to frill up their products. Toyota's inside are a little bit boring and plastic. I expect maybe to have kept costs down, whereas people pursued greater reliability mechanically and everything else, they're going to be able to build, don't forget they also have the Lexus brand that does amazingly nice interiors. They are going to be able to build those same cars and have huge cost advantage. As good as this will be, and we keep talking about cars, by the way, this is Nintendo games. This is Mitsubishi, which is not just cars, it's not just motor, it's property, it's a conglomerate of many, many things. But sometimes it helps to bring it down to a simple product that everyone can understand. But it is not just cars. The Nikkei 2225 is stuffed with a lot of things. The only things I would not be very excited about are the banks themselves. But anything that is a manufacturer of high-end technological products that is sold offshore by a big conglomerate corporation. Most of the brands you'll know, such as Panasonic, etc., and all of them, will likely do exceedingly well. So you can appreciate here that is in fact a massive call still to happen. And as we say, it doesn't go up in straight lines. Look at this interaction. Of course, it was with the 28K. The 28K was interesting because it was a point of support on the way down where you bounced. And then you had to break it with momentum. And yes, guess what? You had an inverted HVF way back then in 92 when you were still up in the 20s, the 23s, 24s. You ended up going all the way down sub the 7,000, 7,500s. I think you're somewhere there. Let's get that low a little bit more accurately. A low on the Nikkei. Wow, 6,994.90. You traded from the 24, 25s on that inverted HVF with downside continuation all the way down sub 7K. Sub 7K. And then you languished, not much above it, all the way till around about here, November the 12th. And then you gradually built a base. And then we got interesting with our debt collapse that initially causes a flush out to the downside to get everyone out the Nikkei before smashing it to the upside. On the debt collapse, they're going to keep the interest rates far lower. And you have a concept of purchasing power parity, and you also have an interest rate based parity level. In other words, countries with higher interest rates should attract more capital to support their more sketchy currencies. That should see, if all things else being equal by risk, the money flow to the higher interest rate. But if there's perceived more risky, these things all balance out. So until you get a rate of return in a free market, assuming no ridiculous yield curve control notions and statist interventions, where everybody's rates roughly represent the risk of that nation state's propensity to potentially void the debt and collapse and cause losses. And you got told that America was a risk-free rate. Well, now you're seeing the turn of a cycle. Now you're seeing. Let's go into some of the equities that shine. So, and by the way, these are also generating upside-based HVFs all the way. So Toyota, this is on a daily, beautiful little upside on the daily there. But let's just put it on the same time frame as all the others. And we'll take a look right down here. You'll see monthly. Let's go monthly. So 2021, just as all of that started to unravel here, a very good setup right here for Toyota. You can see him here. We can draw it for you. You can find out more about HVF method and how we play with it. But very good setup there. And a squeeze for additional leverage moments on individual equities while you play your long Nikkei short yen trade. And now everyone's heard about Buffett. Now a few people pay attention. We've been the town crier on this since 2021 and the beginning of the devaluation of the yen. And the minute we heard your yield curve was going to be retained, we knew that's going to be equities up, big macro exporter equities up, and currency down. The only other release valve is the currency. If you don't up your rates to match America, don't forget they are the currency of the world. They can actually print dollars. You can only print yen. You should never long-term have significantly lower rates unless you've got a brilliant saving rates and far less debt. Unfortunately, Japan's on the wrong side of that one, and they've got an inverted demographic of the old. The most nappies sold are to adults, not to new kids. That's 0.91 children per couple. That is not going to retain their population. So that is Toyota. You can see how beautifully it's done. I'm just going to take that setup off because it's making a mess there and it stops you from hearing. We are getting into real melt-ups time here. Now, of course, you don't chase a melt-up, guys. But in the long run, this is going to do exceedingly well. It is a buy on pullbacks for people not yet involved. We refer to this as the 3 impulse rising wedge. This is almost like too good an HVF that's been bent to the upside. It's a melt up out the 2. It's called a type 2. In fact, a type 3 rising wedge, where you'll actually go into an upside trend to the upside. So it's when falling rising wedges don't break down. They don't even test down. Or test up and then fall down. They're just melting up. They're going in the wrong direction. So that's absolutely fascinating. So that is Toyota. We'll show you 3 other equities. Of course, you're not getting them all because you're not in the group, but that's okay. You've got enough to start with. That's the Nikkei again. Where's those other equities? Here's Nintendo. Here's how Nintendo has done since 2012. 810 yen. 800 yen, actually, down here in 2012. Today, 8,419 yen. So that's more than a 10x in 10 years. Also, great little recent setup. Put it out on the weekly there. It gives you opportunities to occasionally use leverage on the upside to grab a little more gains. Everything that is trending strongly up can potentially give you amazing continuation patterns. Bang! There's another one. Smash it in. There's your triggering event candle. Should be impulsive and hardcore to the upside. Was it, sir? Yes, sir. 3 bags full, sir. Did it make our first interim and have a pause? Yes, it did, sir. How was that pause? Yes, it was a bull flag, sir. How did that go after there? Very much as the best bull flags do, sir. Have you made your second interim? Yes, sir. Did you get a pullback? Yes, we had a gap back in actual fact. Oh dear, this is just coincidences in the method. You must think it's completely arbitrary. How many other people talk to you about trading methods that give you hard targets, entry points with stops so that you know your risk reward before the event even occurs, and even tell you on your journey path when you're likely to have a minor pullback and progress decay so you don't watch the screens and you stand too? I don't know. And not 1 interim, 2 interims before the target is made. That is unbelievable. It is HVF method. It is brilliant. And think of what you could be making in a hedge fund of HVF method, being long Japanese stocks, being short the yen, and how would you have done? With very light conservative leverage, if any at all. Think about what it would have done for you already. No cryptos, no anything. Owning big dividend paying mega corporations, such as the like of Nintendo, Toyota, and I think our final one that we'll be showing you is Mitsu, or is it Honda? Let's show you Honda. This is how Honda is done. Again, look at the March 2020 events. Lows, 704 yen. Now 1800. Now that's almost an underperformer. But let me tell you, that underperformer is an underperformer from 800 to 1800 in literally 4 years. And it's like, you're a laggard. You're a laggard. By the way, little top tip from the HVF boys and the community. This is one huge structure, and Honda will be getting its boots on. By the way, this is one huge structure that has triggered, and Honda will be getting its boots on. Yes, as a reminder, I thought I was going to show you Mitsubishi. Mitsubishi comes next. We're showing you 4 stocks. There you go. You've got a clue on 4 stocks. Mitsubishi. Wow, wow, wow. Isn't that lovely? Look at those floating my lines up top there. What did you do? What did TradingView do that all my drawers have to get cocked up? You are insane. Let's take them off. You ruined it. You spoiled it. I don't know what you're doing. Doesn't matter. The point is made. Do you want to be in stocks like this? Do you want to be in manufacturing dominating particular equities in an environment getting a currency benefit that you are not living next to? You don't live in Japan, but guess what? They pay dividends. They're mega. You see their products in the windows every day. You walk past them, you drive past them, you drive in them, you use them in your own home. Believe you me, you are no more distant or near than you are to Ford, GM, or your local products, your local dishwasher, Whirlpool, or whatever it is that you have in your beautiful American home. And I want to make it a more beautiful home. I want to make you wealthier, and I want to keep you focused on the grand macro. And for those that think that the debt doesn't matter, the pace car is going through the fire. The rest of the grid are lined up behind. What you see here is what happens. They can't put rates up. The bond market is very much in trouble. They are artificially trying to hold it together, and as a result, they are letting the currency go. Now, America, Europe, all the others, they're either going to hold their bond market up until it's time for the all fall down, you understand. There is a group of people, chosen people, that are very, very clear about getting everything ready to collapse. So there will come a time where it'll be allowed to collapse, and unfortunately you'll be one of the most damaged by that, and it's terrible. They're going to feel terrible for you, believe you me. But in the meantime, they are making mega money on this trade, knowing that no other country has such low rates. No other country is happening to support their debt to the same degree yet. And as a result, the currency goes down and the grand macros go up. Anyway, that's it. That's Mitsubishi Corp. How about that? Where was it? March 2020. Here you go. There was your sell-off. The low of March 2020 was 698. You could buy sub 700 yen, 3,250. So you might say to me, and some people say, but, the yen's lost value in that time. You can buy ADRs in dollar terms on any of these, or you can trade synthetically the futures on the Nikkei and short the USDJPY. You can get dollar-based pricing on these equities, and they should still be going up if you choose them individually, or you just trade the futures on the Nikkei 225, or a selection if you can get warrants on those equities to the long side. If that's too complicated and you're not too sure how to deal with it, well, maybe you shouldn't do it. Buy an ETF on the Nikkei 225, and that should be good enough. By the way, I'm warning on exchange traded funds what they truly have, and beware the great taking. The counterparty risks for trading and investing cannot be stated enough. So owning an equity and a paper statement showing you own certain shares is still probably one of the best things you can do. And this is counterparty risk times, stripping the wealth from the people that Klaus sees may become angry for some reason. He's concerned that we'll go into an angrier period. I can only wonder what they are planning. That's going to see you all end up so angry and owning nothing. Interesting. Catch you next time. Thanks for the support. Thanks for the likes. Look at these charts. Start working on building wealth. Click the link below if you want to build wealth in reset times. Until next time, bye for now.